Welcome to Thoughtful Money. I'm its founder and your host, Adam Taggart. As you can see, I'm still on the road here for the Thanksgiving vacation, but I wanted to bring you this very special report. Every year, I'm asked to chair the panel on the future of money at the New Orleans Investment Conference. I chaired it this year, as usual, fantastic faculty, highly enlightening. Fiery debate, and the faculty this year was spectacular. It was Peter Schiff, it was Larry Lepard, it was Brent Johnson of Dollar Milkshake fame, and Russell Gray. And folks, I could tell you about how great it was, but probably just easier for me to show you. Enjoy.
Now it's time for our Future of Money panel, and I'd like to introduce our moderator, Adam Taggart.
For the Future of Money panel, I'd also like to give a big thanks to Brian and the team here for running their usual standard excellence show. If you have not attended a previous Future of Money panel, just know that it's known as sort of the barely controlled chaos panel. Due to the fireworks that we've seen in it over years past, and you'll understand in a second when I introduce the panelists here. I kind of think of it like hockey, right? You tell yourself you're there watching it because you're hoping for a good game, but really you're just looking for the fights. I think today will be no different there, but let me introduce our panelists and we'll get it started. Starting off is Peter Schiff, Chief Economist and Global Strategist of Euro-Pacific Asset Management. He's Chairman of Schiff Gold, founder of the Schiff Sovereign Newsletter, and host of Schiff Radio. Next is Brent Johnson, CEO and Portfolio Manager of Santiago Capital and developer of the Dollar Milkshake Theory. Then we've got Lawrence Lepard, founder and managing partner at Equity Management Associates and author of this year's must-read book on sound money titled The Big Print. And last but not least, we've got Russ Gray, founder of Main Street Media, the official media platform of the New Orleans Investment Conference this year.
What's he got?
He's got a mystery package under there.
What did you bring?
Well, you know, last year we had a little drama. So I thought that if it got nasty, you guys could have it out. Remember this?
Is that Rock'em
Sock'em Robots? When you were a kid?
That's a great game.
Rock'em Sock'em Robots. So this is the Bullion Bruiser over here. In the right corner, the Bullion Bruiser. And over here, the Bitcoin Bruiser. So if it starts to get heated, they're going to get after it. All right.
All right, gentlemen. Well, look, lots to talk about this year. It's been a record year for the precious metals, even despite the correction they've had recently. Gold is still up over 50% for the year, and silver's up over 60% for the year. And gentlemen, I actually had inside knowledge that it was going to be a great year for the precious metals, because leaving this conference after last year's fisticuffs, I was back at the airport in New Orleans, flying back home. And I was there in the baggage check line, and I was standing next to this really delightful older couple. And we got to chatting, and as they were moving their bag to check it in, the bag fell over, and some of the presents they had brought with them spilled out. And I was helping them put the gifts back in the bag. And as I looked in the bag, I realized this bag was like infinitely deep. It had infinite gifts in it. And as I looked at the couple, and kind of clicked, oh, the guy had a long white beard, kind of a big belly. And I said, "Are you Santa Claus?" And he said, yeah, I am. My wife and I like to come down and have a little bit of fun here, blow off some steam before things get real busy at the poll, during December. But, do me a solid, please. Don't let anybody else know. We're trying to keep it on the down low. And he said, if you do, I'll grant you a Christmas wish, any wish you want. So I said, well, I just came from this Future of Money panel. It was kind of crazy. But it would be really interesting if silver hit a record price in 2025, and then we could talk about that. And he said, oh, man, buddy, I can't do that for you. I'm sorry. That's kind of like right at the edge of my abilities. And to be honest, we have so much silver in our electronics and our sleigh bells and our tinsel. It would almost bankrupt me to do this. Just please, ask me for anything else. And I said, okay, well, the panel's got some guys who are pretty passionate and kind of get, pretty wild sometimes, going after each other. I've got Peter Schiff and Larry Lepard on there, and he said, oh, I know those guys. I'm not going to tell you what list they're on, but I know those guys. And he said, well, what do you want me to do? And I said, well, look, if you could just encourage them to give concise answers and be respectful of one another, man, that would be great. And he scratched his chin and he thought for a second and he said, nah. How about $54 spot? Would that work for you?
That's a good line. That's a great intro.
All right, gentlemen. Well, look, as I said, so we've had a record year for the precious metals. We've had a record year for Bitcoin, too, and it's taken its lumps a little bit recently, but it's still up 10% for the year. And we've got something really interesting going on with the new administration and stablecoins. And if there's time, Brent Johnson's going to talk about the implications of that, some of which may actually shock some of you here in the room. So to kick it off, I figured we'd just sort of end where we started last time. Peter, we'll start with you. A lot of people claim that gold is the money of the past and Bitcoin is the money of the future.
Here we go.
Do you have any thoughts on that?
An interesting question. Yeah, well, I think that not only is gold the money of the past, but it will be the money of the future. It hasn't been money in the present, although central banks still hold it as money, and they've been buying a lot more of it as their reserve for their currencies. But I think that the people who are advocating for Bitcoin as some type of digital alternative to gold, and that it's going to take on the role in the future that gold played in the past, I think that's based on a flawed misunderstanding of what money is and why gold became money, and the conceit that just a artificial string of numbers can somehow replace the real value of gold and the reason that it's been money for thousands of years. I mean, Bitcoin has certainly replicated some of the monetary properties that gold has, but not the intrinsic value of the metal, without which it never would have became money. But I think it's ironic that I think to the extent that blockchain is relevant in the future when it comes to money, it will be because of tokenized gold on the blockchain. And I know we're going to talk a lot about stable coins. Well, the best stable coin you can have is one that's backed by gold, because there's actual stability in gold. There's no stability in the dollar. And if you're going to hold a non-interest-bearing instrument, why would you want to hold non-interest-bearing federal dollars when you can own gold, and then you can transact with gold and receive payments in gold for your goods and services, your labor, rather than a fiat currency that's losing value? You can receive real money that preserves its value, and you can negotiate it as easy as anything else. And if anybody wants to get in on the ground floor of this, go to tgold.com and open up an account. That's my new venture.
All right, I see the wheels churning in both Larry and Brent. Which one of you wants to go first?
I'll go. Look, Peter and I aren't that far apart in our view on Austrian economics and how fiat is doomed. I think where we differ greatly is on what money is, what it can be. And I think if you study the Austrian economists, including Menger, what they've said is that money is always what's accepted by mankind as the most liquid good. And historically, Peter's right, 5,000 years, the physical properties of gold made it the best money known to man. But money is and always has been a ledger. You don't have dollars in your bank account, you just have digital entries on a computer. We live in a digital world, and ever since the telegraph got invented, gold hasn't really been used in day-to-day transactions. You don't take a gold coin and purchase something, although it preserves purchasing power. So this ledger nature to money, I think, and we live in a digital world, I think money is going to increasingly become more of a ledger. And I think that what Bitcoin did was it cracked the mathematical problem of making a ledger in something that's digital immutable. And that when it did that, now people are beginning to accept that it has monetary properties. And Peter can argue that gold is better, and in some ways gold is better, but what I would say is the adoption continues to increase, and unless that reverses itself, I don't see how it doesn't increasingly, quote unquote, become money because it has money-like characteristics. Let me just add one other point. Peter thinks that digital gold, or that gold attached, a gold token is the future, a blockchain-backed gold token. To me, that's tits on a bull. You have gold or you have a Bitcoin because there is no third party involved. It's a bearer asset. You don't have to worry about anybody else. The minute you say, I'm going to sell you a token backed by gold, well, who are you? And how do I know the gold is really there? And so, to me, that's a non-starter.
Yeah. Well, the same applies, though, to stablecoins.
Completely, no disagreement at all, Peter. I have issues with stablecoins.
But the issue is, though, nobody's using Bitcoin as money. They use it to trade. People aren't transacting in it. They're just gambling.
Nobody's using gold as money either, though. Nobody's using gold as money either.
Well, they could, but they have in the past.
But they're not.
But
they will.
There are two attributes of money, right? One is store of value, and one is medium of exchange. I mean, let's face it, fiat has won the medium of exchange game, overwhelmingly, right? And gold and Bitcoin are these two alternative things that kind of triumph or are trying to grab the store of value case, because the fiat store of value case is a piece of shit, right?
Right, but to store value, you have to have value. You can't store what you don't have.
Well,
Bitcoin doesn't have value.
But what is value, Peter? It's perception. It's what people perceive to have value. I mean, gold's a shiny rock, and people have perceived it to have value because of it. Because
it's metal. It's metal.
Metal, fine. Because of its qualities. It's the qualities that give it the value. And an immutable ledger has a different set of qualities that if people believe that it has value, then it has value. And, a couple hundred million
That's why fiat currency has value, because people believe in it.
No, fiat currency has value because the government tells you it has value, and it's legal tender. One of the problems we have here with both of these assets is, and this should be changed, is that they should both be made legal tender. We should not be paying capital gains taxes on gold or silver or Bitcoin. And that's one of the... That's one of the recommendations of my book, is that the government should make all of these forms of money legal tender and let the best one win. And maybe it'll be gold, maybe it'll be Bitcoin. We all have different opinions.
So, Brent, I'm sure you've got your thoughts on this, but real quick before you chime in, you have said many times that money really is just it's a means of control, right? And at the end of the day, what determines money is whoever is in control states is what's money. So to Larry and Peter's point, or debate of, hey, what might be the best money in the future, who will determine that, and what would actually dislodge the current dominant monetary system, which the current control system embraces, which is the dollar?
Yeah, I mean, I think if we're talking about the future of what's the best asset, then Larry and Peter are making good cases for both gold and Bitcoin. If we're talking about what the future of money is, or what people use as money, not what we want money to be, but what it actually is used as in the real world, I think fiat is the future of money. Now, I don't like saying that. I don't prefer that, but I think that's what the future is. And I'll prove this by saying, how many people believe taxation is theft? Let's show of hands. Okay. How many people pay their taxes anyway? Until all of you stop paying your taxes, fiat is going to be money.
Or, I would add, until fiat completely and utterly fails and hyperinflates.
Yes.
Okay.
Well,
yes.
It's already failed. We just use it anyway.
But it hasn't. It perhaps
failing
has failed.
slowly.
So this is another thing. When you read the definition of money, it's a store of value and a medium of exchange. Nowhere in there does it say it's a perfect store of value. Nowhere does it say it has to hold 100% of its value over an immeasurable amount of time. We want that to be the case. I would love that to be the case.
Well, the dollar's lost over 99% of its value.
As it is designed,
kind of a lot.
but it is designed to lose money. So when people say that the money is broken, the money is working exactly how the government wants it to work.
Oh, yeah.
So they issue the money. It works exactly how they want it to. We don't like it, but until we push back, that's what it is.
Yeah. Well, eventually they lose control and they destroy the value completely. So
I completely agree with Peter
There's
on
no
that.
precedent in history for fiat currency surviving for that long a period of time.
Totally, and that's why when the euro fails and the yen fails and the yuan fails, the dollar will rise.
Why?
Because it's a zero-sum game.
Right, but after all of those fail, then the dollar will ultimately fail.
That's
too.
right.
Well, what if the dollar fails
But that's
first?
down the road. That's down the road. You don't need to worry about that today.
Guys, isn't part of the failure there being an alternative? Isn't that the point of failure? Right? You're going to keep using it as flawed as it is until there's a viable alternative. And once there's a viable alternative, and viable means not just immutable, not just physical, but all of the infrastructure, all the plumbing. What Brent is always making the argument, whether you have all the dollar-denominated debt in the world, you got to pay your taxes in the currency. You've got the petrodollar still hanging on. I mean, when all of that infrastructure when an alternative is in place that has everything, or enough of everything that makes the dollar the dominant.
Russell,
You're describing gold. Gold is the alternative to the dollar.
Yeah. So, Russ, why don't you elaborate on that a little bit? Because I think you're going sort of in the BRICS direction of a competing alternative.
Well, I'm just saying, I mean, 2013 I came here and I gave a talk, and it's no secret, I say this all the time because there's so many lessons in failure, and I got wiped out in 2008 because I didn't understand any of this macro stuff. I'm a Main Street guy, and everything imploded on me. I'm like, I don't get it. I work hard, I'm honest, I'm pretty smart, I don't understand it. Well, because I didn't think the way these guys think. And we started encouraging everybody at the real estate guys, please come to this conference, learn this stuff. And over the course of that period of time, I tried to understand what makes this stuff happen. And then I'd listen, and some people would talk about it in a bubble, in like the United States. But there's globalization. And when I went back and I started looking at the history of when we came off the gold standard and the inflation and the gold price went way up, and then we had the oil crisis and the existential climate crisis and the existential pandemic that happened back then, and now I'm old enough, I'm like, oh, same playbook, I've seen this thing before. And then you realize that the European Union came along and tried to come up with an alternative. It was really Europe recognizing the dollar had been mismanaged. And so that's all history. And if you study the history, like, okay, I can see the history. And they say that history doesn't always repeat, but it rhymes. Well, I'm old enough now that I've seen some of the rhyming, and now I see some of the same things going on. Gold rising, right? The interest rates had to come up. The dramatic change in the interest rate that we just experienced as a percentage change was way worse than what happened in the early 80s. I mean, Volcker started at like, I don't know, 8, 9%, and went up to 18, 20, 21. This Fed, Powell went from 0.25 to 5.25. It was like a 20x, so in the real estate space, that caused a lot of drama. But after the financial crisis, China came over here and publicly scolded Barack Obama for mishandling the dollar. The Fed's balance sheet went from $800 billion to $4.5 trillion, or it was on its way to doing that during the crisis. And to come over and publicly scold the US president, I've got the article. That was kind of a big deal. It was embarrassing for the United States. But we didn't do anything about it. We kept doing what we were doing. The balance sheet kept growing. And I watched what China did. And China went and made a bilateral trade agreement with Russia. And that was the beginning of this long-term move to de-dollarize, which was exactly the same thing that the Europeans did, right? We came off the gold standard because Charles de Gaulle did a meeting in 1965. Go on YouTube, look it up. He says, hey, everybody, the United States has printed too many dollars. And so he sent a boat over here to pick up their gold. And everybody started picking up the gold. Gold reserves went from 20,000, which was money back then, drained down to 8. Nixon said, whoa, we're not going to do this anymore. We're going to go broke. And so they defaulted. And so they had to create a whole new money system. And you guys are, most of you are familiar with all of this. We created a whole new money system. We did a reset. We jacked the interest rates way up. We created the petrodollar. We opened up trade relationships with China so we could export our labor. We sold the United States citizens. It would be great for the woman to need to work too and not stay home and take care of the kids, women's lib. And I'm pro-woman. But that was propaganda to convince you that it was a good thing that you had to go to work, right? All of that was because of the inflation that was caused when the dollar collapsed. And so the world now is looking at this. Now, other triggers come along. And one of the triggers that came along was the weaponization of the dollar and the financial system against Russia with Ukraine. And that really woke the world up. So I pay a lot of attention. And when I saw Donald Trump, when he got elected, not inaugurated, elected in November of 2024, threatening BRICS with 100% tariff. I said, okay, well, it's got to be serious, right? It's not like normal for, of course, he doesn't do anything that's normal, but it's not normal for a president to come out and threaten and almost make foreign policy before he's even been inaugurated. Trade policy, but he did. And he did it not once, but he did it twice. So I think it's the height of foolishness as a nation and certainly as a Main Street investor, speaking from experience, to say, oh, what's happening over there doesn't matter to me. Oh, that's not really going to happen. I've been watching this thing for 13 years now, and it is a slow motion. And you can say a lot of things about the Chinese, but one thing they're great at is copying technology. And I think that they looked at what it took for the United States to become the dominant economy, and they are just copying it. They're stealing as much as they can, and all the plumbing that is necessary to begin to upend the dollar system, to create a viable alternative on the global stage, I think they're putting that infrastructure in place. But you don't do it overnight. Like, I'm doing startups right now. And during startups, like, I left the real estate guys a year and a half ago, and it was like, what's Russ doing? What's he doing? What's he doing? Well, I'm spending a year and a half getting all my infrastructure in place so I can finally launch. You do real estate development, the land just sits there, and you look at it like there's nothing happening. Well, yeah, there is. There's architecture drawings, there's permitting, there's bidding contractors, and all of a sudden you break ground, it goes up. I feel like the world has been working to de-dollarize, and they're busy putting the plumbing in place. Main Street has been trying to figure it out. And that's why you see gold at Costco. You see the next generation, like, something's going to change, something's broken. They've embraced Bitcoin. Last year, I said that the central theme is decentralization, and I think that's what the main thing that's driving a lot of things that are going on in the world. I stand by that thesis. I think we do need to pay attention to BRICS, and I don't have any problem with either. These guys might be on opposite sides, but the one thing they have in common is they both believe in sound money, and that really is the answer. Until we get to sound money, we will never, ever be free. We'll always be talking about in the weeds. We really just need to get to a sound money system so the government can't steal from us through inflation.
We may agree, we may like sound money, but we disagree as to what is sound money.
That's fair.
Well, I mean, you look at Trump administration, and hang on. This is my conspiracy theory hat. I brought it. So I wear it whenever I do a video, and I'm going to go down a rabbit trail a little bit. But in Trump 1.0, he had a picture of Andrew Jackson in his office. And Andrew Jackson was the last president that paid off the debt, and he took out the last central bank. I think that picture was on his wall for a reason. He nominated Judy Shelton, a gold bug, to the Fed. Couldn't get her in, but it showed something. He gets into office, he goes, we're going to audit the gold. And then crickets. Well, there's a lot of people in the gold community who think maybe that gold's not there. Well, if you wanted to give the guys that took it time to put it back, what would you do? You'd tell them, I'm going to come check, and then you'd give them time to put it back. Now, I'm not saying that's happening, but it wouldn't surprise me. Right? And then you say, okay, we've got to get the sound money people on the same page. So we're going to be pro-Bitcoin and we're going to be pro-gold. And I agree with Brent. We got a dollar infrastructure system that works globally. And as long as it works, people are going to use the dollar. So if we don't change the dollar, we don't change the dollar system, but we bring the dollar to some kind of backing to try to preempt perhaps the Chinese doing the same thing. I don't know.
The current system, though, doesn't actually work. I mean, it works for the United States because we get to live beyond our means, but it doesn't work for the rest of the world that has to support us. And the global imbalances keep getting bigger and bigger and bigger because as long as the dollar is a reserve currency, America will abuse that privilege to live beyond its means and consume that without producing and borrow without saving. And these imbalances get worse and worse, and we do all sorts of damage to the global economy as long as this system is maintained.
All the more motivation for the rest of the players to join the cause to de-dollarize.
Yes, it is inevitable.
But it's not an easy task.
Well, one thing I would point out is everything that the United States does to the rest of the world with regard to abusing the system, the rest of the world does to their own citizens using the exact same methods. And if they could do it to the rest of the world, they would. The sins of the United States government are too long to list. The number of mistakes we have made would fill up this entire room. But that doesn't dispow intelligence and genius on the behalf of China and Russia and Afghanistan and Egypt and Turkey and Libya and all of these other countries. I think there's oftentimes a belief that, you know, our leaders are a bunch of idiots, which I'm not going to argue with you when you say that. But I don't think that the leadership on the other side of the planet is, you know, fair and treats their citizens better and, you know, is a paragon of virtue. You know, most governments are in place because they want to control the situation, whether that be the resources, the people, you know, the region, and the idea that, you know, the rest of the world is going to offer this new system that is more fair and more altruistic than the one that the United States is offering, I think is completely misplaced. I agree that the alternative already exists, gold. It's been around for thousands of years, and it's been used, and it works. But that's not what the world has chosen. The governments have chosen something else, and until the people push back hard enough and demand its use, we are going to use the money that the government tells us that we need to use.
All right, folks, let me chime in here. So, a couple of things, and the thing I'm having the most trouble wrapping my brain around is that Peter and Lawrence have given the most concise answers on this panel so far. I've never seen that happen. So, I want to build on what you just said there, Brent, but real quick, Larry, I want to toss it to you. Yeah. We haven't talked about Bitcoin all that much yet, so I want to ask you sort of two joined questions for you to react to. Where do you think the Bitcoin critics, you know, where do they have validity in their concerns? And then secondly, where do you think most people are missing the boat on Bitcoin right now?
Great questions. So I think the validity, the only concern that I have, and it's a concern that actually Michael Saylor has, because I asked him in a small group private conversation, is that the Bitcoin software and code is controlled by a group called the core developers. And the code is open source, everyone can see it. It's not very, you know, so there's nothing secret about it. And improvements and changes are proposed and voted on and then accepted. And if somebody really wants to change it, they'll try a hard fork, and of course nobody will follow them. But, you know, upgrades and changes, small things generally, are made by this group of people over time. And as with any group of people, they don't always agree. And there's a debate going on right now over something called op return, which is something to do with the space on each block and what can be in it. And, you know, there's a very strong argument on one side, a strong argument on the other side. I have a view on it. I'm not going to state it here because it's just not, it's not the point. The point is that, you know, Bitcoin, the software, will have to evolve over some period of time to deal with various threats, one of which is quantum computing, which I think doesn't really become a threat for at least 10 years and maybe 20, based on the scientists and the things I've read, and I read a lot about it. So I'm not terribly worried about it. But the point is that it could become a threat, and quantum computing would allow people to hack the coins, hack the passwords on the coins, which is what makes the coins secure. So as Brent and I were talking about, the whole notion is completely immutable. You know, there's some very small percentage chance that someday it's not, unless it's upgraded, and that upgrade would have to take place as a result of the core developers. And so, you know, as Saylor said to me, he said, look, Larry, you know, the problem with human beings is they want to fix stuff, they want to tinker with stuff, and this thing is working perfectly and beautifully. And the only thing that concerns me is that some group of rogue core developers would mess with it. Now, as I say, there are safeguards because it would have to be approved, voted on, accepted, forked, et cetera. So I rate this as all extremely low stuff, but it's not zero. The second criticism, I think, well, that's really the major one. That's really the only one I can think of. I've said to other people, though, if for some reason adoption were to slow down and people were to just kind of and this is why when I argue with Peter on this, Peter's like, well, okay, it's going to blow up here, Larry. It's eventually going to die. And I'm like, okay, fine. What's the proximal event that's going to cause it to blow up? Because it's been 16 years and it hasn't blown up. It's retreated. It's had big drawdowns. We all know that. But every time it comes back because the underlying properties are what they are. And as long as adoption continues, as long as more people, I call it, in my book, I call it dogs eating the food. One of the great old venture capitalists at Sequoia said, you know, when I'm looking at companies to invest in, I want to see situations where the dogs are eating the food, and more dogs and more food over time. And so, you know, implying increased demand. And so, if you look at addresses, if you look at hash rate, if you look at usage, if you look at anything, transactions, et cetera, in Bitcoin land, it's growing consistently.
Yeah. But you know, when you talk about adoption, I don't like people keep saying Bitcoin adoption. What are they adopting it for? They're not adopting it as money. People aren't buying Bitcoin, the vast majority, for the reasons that we're discussing. They're not looking for an alternative to the dollar. They're looking for Bitcoin as a way to amass more dollars. They're buying Bitcoin because they think the price is going to go up and they'll be able to sell it and get more dollars than they started. So yes, it's succeeded for 15 or 16 years because we haven't run out of greater fools to buy Bitcoin at a higher price. And what's happened recently to kind of propel it higher is some of the early adopters, you know, the big OGs who bought Bitcoin a long time ago, amassed so much money in this pyramid that they were able to, you know, entice Wall Street to get into it with the prospects of making money, booking bets on Bitcoin with ETFs and getting underwriting fees on Bitcoin treasury companies. And then they had so much money that they bought off politicians. They bought off Trump and they put him in office, and now they're using the power of the government to try to extend this scheme and get more people into it, not adopting it as a medium of exchange or a unit of account or any kind of money, but as a get-rich-quick scheme as they ride the Bitcoin rocket ship to the moon, and it goes to $1 million or $10 million of Bitcoin, and that's what's going on.
First of all, it's not a scheme. It's a protocol. It's being adopted. And you say, what are they buying it for? They're buying it as a form of money that stores value because it has a limited supply, full stop. The medium of exchange, means of exchange, sure, that's nascent. There's something called the Lightning Network, which I have a Lightning Network wallet on my phone. When I go to any Bitcoin conference, I can buy everything I want with a QR code and immediately transact in Bitcoin. The cost is about a penny or less, you know, as opposed to paying 3 or 4% for MasterCard.
Yeah, what percent of Bitcoin transactions are that versus trades?
Oh, it's trivial right now because we're just getting going.
Yes, and it's been 16 or 17 years, and it's still trivial.
Well, but it takes time. It takes time for the medium of exchange piece of it to come in.
It's never going to be a medium. In fact, even the Bitcoin community admits it'll never be a medium of exchange.
That's not true.
There are other tokens for that. They claim it's digital gold.
It is digital gold. That is not true at all. It will become a medium of exchange.
When?
In the next couple of decades.
When will gold become a medium of exchange?
Well, it's already been a medium of exchange.
It has been, but when will it become that way again?
I don't know. It could be, but it could be used as a medium of exchange right now. Better than Bitcoin. Bitcoin is too slow and too expensive to use for anything.
Bitcoin's slower than
trading.
Is it slower than gold?
Better than Bitcoin. I can send $1 billion from one end of the world to the other in 10 minutes and have it fully verified.
Yeah, and I can send $1 billion worth of gold faster and cheaper.
On a 747.
No, with a token. I can transfer the ownership. You don't have to.
And I have to trust you issuing the token?
I'd rather.
Thank you, no. Thank you, fucking no. I don't trust you as far as I can throw you.
I'd rather trust a reputable custodian with something than to trust the collective delusions of a bunch of people that nothing is something. All you're trusting is that the people that own Bitcoin don't wake up and realize they got nothing.
I just want to.
There we go.
Hey.
I just want to point out that the reason that Peter's wearing a green tie rather than a gold tie is he knows the dollar's not dead yet.
I wore my gold tie on the first day.
I don't think the average Bitcoin owner believes that they've got something that is nothing. They know that they've got the most secure, sound form of money in the world, and they know that the stock-to-flow ratio is much higher than gold and going down every 4 years. And ultimately, Bitcoin is going to demonetize gold in the same way that gold demonetized silver.
Well, then, if that's the case, why has Bitcoin lost 1/3 of its value priced in gold since its peak? In fact, Bitcoin is worth less in terms of gold now than it was 4 years ago, despite all this so-called adoption.
If you take
the Bitcoin president, all the Bitcoin ETFs, all the Bitcoin strategy companies, Bitcoin has lost 1/3 of its value relative to a rock.
Yeah, so
a metal.
I thought it was a metal. If you take a look at that chart, and the chart was in my presentation yesterday, that charts the number of ounces of gold against Bitcoin, it has been up and to the right since Bitcoin has been formed. Right now, it is on a drawdown. It's roughly at 24. It's been as high as 40. It's going to 60, then it's going to 80, then it's going to 100, then it's going to 120. I mean, Bitcoin's going to demonetize gold. It's just that simple. It's a better form of money.
No, it's not.
Yeah,
It's not any form of money.
All right. So I'm going to rest it back here for a second. So, Brent.
Yes, sir.
What I'm summarizing from the three other gentlemen here is that over the foreseeable future, the U.S. dollar, the fiat U.S. dollar, is going to continue to lose purchasing power.
That's true.
I think you would agree with that.
Yep.
They also seem to think that that trend will push the rest of the world to de-dollarize, and over time, de-dollarize in favor of sound money. That might be Bitcoin. Larry's arguing that. Might be gold. Peter's arguing that. It might be some sort of hard asset-backed BRICS currency. That's what Russ was just arguing there. I think that you might think differently, and I think stablecoins may play a role in your answer. Can you explain that as much as you can in the remaining 9 minutes we have?
Define
Sure.
stablecoins.
So I'll give, so my speech later today, I think I'm on at noon or 12:30 or something, we'll go over this in detail. But essentially what I think is happening is that the technology that was developed in the private market by the Bitcoin and the digital assets and crypto, I think woke the United States and other countries up to the fact that they could no longer just rest on their laurels and use the fact that they could enforce legal tender laws to keep their money as the medium of exchange. And in many ways, I would argue that the whole rollout of digital assets and the rise of Bitcoin was maybe the greatest beta test in history to see whether it would be adopted, whether it would work, how fast it would work, how tough it would be to regulate. But I think they have now started to adopt that private technology on a regular or on a regulated and official state sponsored basis. And you've heard Scott Bessent talk about it. You've heard some other government leaders talk about it. They passed a Genius Act earlier this year, which is a way to regulate stablecoins, and it talks about what they can and can't do. And essentially, a stablecoin is a digital token that can be passed around the world instantaneously, settles instantly, and then that token is tied to some other asset. So you don't buy a stable coin thinking it's going to increase a lot in value like some of the, it's not like a Doge coin or a Bitcoin where you're expecting it to rise in value. What it is it's tied to some other asset, and it should stay stable versus that asset. So you could have a gold stable coin, which is I think what Peter was talking about, or a gold token, and it will, that token will stay stable versus the price of gold. It may not stay stable versus the dollar or Bitcoin or something else, but that token will track gold. 99% of the stable coins already in existence are already tied to the United States dollars. And the reason that's important is because that was the private market, entrepreneurs meeting demand that people wanted to hold dollars. It's not 99% US dollars because the market wanted 99% gold and they said, no, we're giving you dollars anyway. That was driven by the free market. And I think the United States now realizes that it can adopt that technology and use it as a way to not only help fund itself going forward. We all know about the challenges the United States has in funding itself. But more than that, they can use it as a digital weapon, for lack of a better way of saying it, to dollarize the rest of the world rather than de-dollarize the rest of the world. Yeah. Because as much as we as Americans sit here and talk about how bad the dollar is, for many other citizens around the world, the dollar is much better than their local currency. And all you have to do is, next time you travel, just talk to them. Ask them whether they would rather hold their local currency or a US dollar. Most times they will say a US dollar, especially if you're traveling to an emerging country or a developing country. For them, they look at the US dollar as stability. Now, we in this room may think that's ridiculous. We may not like it. But the market says that is the case. That's not me saying it. That's the market telling me that's what they're saying. And so I think the future is going to be some kind of a combination of government-issued fiat as well as the digitized technology and innovation that's been developed over the last 10, 15 years.
Yeah. I think the main reason, though, that the majority of stable coins are denominated in dollars is Bitcoin is generally expressed in dollars, just the way gold is expressed in dollars. People around the world think of gold and a dollar price, and so they thought that with Bitcoin, they promote Bitcoin that way. But the demand, the vast majority of the demand for stablecoins is for people who want to trade Bitcoin, and they need something to trade in and out of. And so when they want to sell Bitcoin, they can move into a Tether or a USD token, and then they can go back and forth. And so that's the main use case for stablecoins, is to facilitate trading in Bitcoin or other tokens. And so it's kind of like an on and off ramp in and out of crypto. But I don't see it being widely adopted by people who say they want dollars, because why would you hold dollars in a non-interest bearing stablecoin? If you have dollars that you want to hold, at least get interest on them, at least put them in a money market. Why buy a stablecoin and let the stablecoin issuer keep all your interest while the dollar depreciates?
As an American,
that's the American point.
Peter's right that part of the use case for stablecoins is an on-ramp and off-ramp for dollars. And just so, I don't know if everyone here knows what stablecoins are. Stablecoins are coins they're like crypto, that you can trade through a crypto account, but Tether and Circle are the two biggest issuers. They're about $200 billion total in size. And they buy treasury bills behind it. They take in your cash, buy a treasury bill, and then issue you a token that represents a dollar. But let me say, Peter's right. One of the main use cases, not the only main use case for stablecoins, is an on-ramp and off-ramp for crypto trading. But what really drove stablecoin adoption is I view the stablecoins as an alternative to the SWIFT network. So what happened is when the U.S. decided to sanction Russia and sanction Iran and say to all the business people there, and I was in Prague recently, earlier this year, and I met with a lot of Russian business people, suddenly they had no way to pay anybody or move money or receive money or whatever it might be. But they quickly, smart entrepreneurial workaround, they get a Kraken account, and the dollar is the universal unit of measure, so they just say, fine, pay me, stablecoin dollars into my Kraken account.
Doesn't the U.S. government still have the ability to go after those tokens? They know who owns them. They
not if they
track them in a wallet, or
Kraken's
not yet.
Yeah, not yet.
I mean, I'd say, look, if you really want to get out, then just go to gold. Why stay in the dollar, right? I mean, why not just take a dollar?
But we're talking about means of exchange, not. I mean, this.
Well,
but it's a different argument.
gold-backed stablecoin is just as easy to exchange as a dollar-backed stablecoin. You have the same thing where you have to trust a third party, but at least it's a third party that the U.S. government can't intervene. If the gold is stored in a custodian that's not in the United States, unless we're going to invade that custodian with troops, we can't get the gold.
But you don't store money. You store assets. Investing and using money on a day-to-day basis.
You can store money. That's what banks were supposed to do. They store your money. At least when we had money.
Okay, so you asked why would somebody hold a coin that doesn't pay interest, get a money market fund at a minimum? As an American, you're totally right. That makes a lot of sense. But if you live in Argentina, or you live in Egypt, or you live in Turkey, or you live in Bangladesh, and you don't want to hold the local currency, what you end up doing is you end up holding US dollar physical cash. And that's why if you go to any bazaar or little market in anywhere in the world, you can exchange local currency for dollars. Because everywhere in the world uses dollars on the black market.
Right, but if you're going to go to a token...
This allows citizens of those countries who don't have a bank account, and even if they do have a bank account, their bank will not allow them to hold a US dollar balance. And even if they do have a bank that allows them to hold a US dollar balance, they won't let them take it out in times of crisis.
Yes.
This solves all those problems.
But that's because it would be not as convenient for them to transact in gold coins. But once they're going to move onto a token and they're going to have it in their smartphone and their wallet and they're going to exchange, once you're choosing tokens, at that point, dollars lose their advantage over gold.
They don't.
Gold has an advantage over the dollar in the form of a token. Because
then why hasn't all the money? There is a digital gold token right now, and there's digital US dollars. Why haven't it migrated from Tether?
The reason right now the demand for tokens is primary as a get-rich-quick scheme. It's speculative money trying to get rich, and therefore they're not interested in a gold token.
We're not talking about gold mining companies. We're talking about money.
Let me finish. when the demand for tokens becomes to use them In the real world, as a substitute for money, as a medium of exchange, as a unit of account, that's when demand for gold tokens is going to grow. But right now, it's just a speculative frenzy. And so people don't want to buy gold because they don't think there's enough upside. They want to buy what's going to go to the moon, right? That's what they want, and that's where the demand is. There are a lot of gold-backed tokens, but it's interesting. You're talking about Tether. What has Tether been buying? They're buying gold. They're taking the money that they're getting, and they're buying gold. They're buying gold royalty companies. They must know something. They're buying all this gold with the dollars they got.
So I'm going to chime in because I think we're almost done, yeah?
17 seconds.
All right, I want to bring it home for me. Here's the thing. What I've learned is that you have to set your preferences aside, to Brent's point, and look at what's actually happening. And you can be blind. That's why we do panels like this, differing opinions, right? And if you come away confused, just understand that this is all just technology. Gold was a technology, financial systems are technology, Bitcoin's a technology, Tether, they're all technologies. I was in Silicon Valley during the 1990s, the internet boom, every company had a .com. Not all of them were going to survive. You had to watch and see which ones were going to make it. There was a time when nobody was demanding cell phones because they all wanted phones with wires. But after a while, the infrastructure to support cell phones took over because you didn't get dropped calls. So I'm watching, and I suggest watch what the players in the markets are doing, from the central banks all the way down to Main Street. Look around the world at what the global economies are doing, not just the United States, and then watch as the technology and adoption evolves. And there's no reason why you have to pick one or the other, right? There's no law that says you can't hold some gold, you can't hold some Bitcoin, and then just put yourself in a position where you're ready to move when it breaks, because it's slowly, then suddenly.
Yeah, and I wanted to just throw one more point in as to why there aren't more gold-backed
Real quick, Peter, real quick.
There's no money in that.
I was trying to get the last word.
The way you make money is you create a token out of nothing, a meme coin, and you get some fool to buy it from you because it costs you nothing to create it. So all the money is flowing now into just creating tokens out of thin air so that the issuers can get rich. There's not a lot of money tokenizing gold because you have to actually get the gold. Right? And so there's a huge cost there. But when there is demand, for a true demand for alternatives to fiat currencies to be used as a medium of exchange, you're going to see an explosion in demand for gold-backed tokens.
All right, and we're going to end it there. Ladies and gentlemen, a big hand for our excellent panel. Thanks for a clean fight today, gentlemen.
Yeah, all good.
Thanks.
All right.
I like that hat.
Well, that was a pretty phenomenal panel. If you enjoyed it, just take note that that was only 1 hour of one day of the New Orleans Investment Conference. The conference itself lasted for 4 full days. So if you would like to get a replay of the entire event, all 4 days worth of presentations, panels, workshops, etc., you can do that by going to thoughtfulmoney.com/NO. That's NO as in New Orleans. So again, thoughtfulmoney.com/NO. And if you're inspired to take some action in your own portfolio based upon what the experts talked about in this panel, if you'd like some professional help with that, well, then feel free to schedule a free consultation with one of the financial advisory firms that Thoughtful Money endorses. These are the firms you see with me on this channel week in and week out. To do that, just fill out the very short form at thoughtfulmoney.com. Only takes you a couple seconds to fill out the form. These consultations are totally free. There's no commitments involved. It's just a service these firms offer to be as helpful to as many people as possible. And if you'd like me to continue to bring replays of some of the live events that I go do out in the real world back here on this channel, again in the future, well, just let me know that by hitting the like button and then clicking on the subscribe button below, as well as that little bell icon right next to it. And if enough people want me to do that, I'll continue doing this in the future. All right, folks. Well, look, it has been a great experience here. Really enjoyed chairing this conference. Looking forward to doing it next year. Again, if folks want me to continue replaying it here, I will do based upon what you guys tell me. But in the interim, folks, I'll see you on this channel next time. And thanks so much for watching.
Saudi Arabia is now, to my mind, the third government next to China and Russia who are, or maybe let's call it the fourth, India. India, China, Russia, and Saudi Arabia now. And again, these are all, these are members, whether admitted or not. Saudi Arabia is, in essence, in my mind, pretty darn close to a BRICS member in that they are a full participant in the mBridge technology. They are going to all of the BRICS meetings. They are very much have one foot in and one foot out to appease the West, but by all of their moves appear that they are going lockstep with the BRICS movement. They took a major stake in SLV, the silver ETF recently, and enough to demand physical delivery. Now, they haven't done it yet, but you have to have a certain amount, like it's a basket, huge amount, millions and millions and millions of dollars worth in order to be able to demand physical delivery. This is a privilege retail investors do not have.
Saudi Arabia, while not yet a formal BRICS member despite invitations since 2023, is increasingly aligning with the bloc's strategies. Its central bank has quietly taken a large stake in the SLV silver ETF, big enough to allow physical delivery, a privilege unavailable to retail investors, signaling a growing shift toward precious metals. This move fits into Riyadh's broader strategy of diversifying ties with emerging economies under Vision 2030 while still maintaining Western alliances, highlighting a geopolitical pivot toward multipolar finance and alternative hedges in an uncertain global system. Andy Schectman, the CEO and president of Miles Franklin, reveals that COMEX deliveries and offtakes have surged to record levels. Countries like China, Russia, India, and now Saudi Arabia are heavily accumulating silver, signaling its strategic importance beyond just industrial use. Saudi Arabia even took a major stake in SLV, giving them the option to demand physical delivery, something retail investors can't do. Meanwhile, global accumulation is rising. China is buying directly from miners. India has purchased over 800 million ounces in 5 years, and Russia added silver to its national stockpile. Analysts warn that even a small shift of investment from gold into silver, say 10%, could consume all newly mined global supply, potentially triggering a massive squeeze. At the institutional level, interest is also growing. Harvard's endowment recently bought $101.5 million in GLD, reflecting how mainstream precious metals are becoming. Sovereign wealth funds, universities, and hedge funds are positioning for physical delivery, while the general public remains largely unaware of the unfolding shift. Before we continue our talk, please subscribe to our channel and click the bell symbol to receive timely updates. Have fun watching the video, and thank you.
Deliveries onto COMEX are extraordinary, Elijah, as are the offtakes off the COMEX exchange, which are extraordinary. These are very, very much aberrations. They're anomalies. We don't see them very often, or never have until recently. And I remember talking with your dad in 2020 about all of a sudden all of these deliveries coming into COMEX. They've only increased 100-fold. But when you talk about trends, Saudi Arabia is now, to my mind, the third government next to China and Russia who are, or maybe let's call it the fourth, India. India, China, Russia, and Saudi Arabia now. And again, these are all, these are members, whether admitted or not. Saudi Arabia is, in essence, in my mind, pretty darn close to a BRICS member in that they are a full participant in the mBridge technology. They are going to all of the BRICS meetings. They are very much have one foot in and one foot out to appease the West, but by all of their moves appear that they are going lockstep with the BRICS movement. They took a major stake in SLV, the silver ETF recently, and enough to demand physical delivery. Now, they haven't done it yet, but you have to have a certain amount, like it's a basket, huge amount, millions and millions and millions of dollars worth in order to be able to demand physical delivery. This is a privilege retail investors do not have. they will. I find it interesting. We've talked at length about China flying around the world and buying doré and concentrate directly from the miners in South America and Mexico. We've talked about India buying over 800 million ounces in the last 5 years. We've talked about Russia making it part of their national stockpile, which we'd never heard before from a government, and now Saudi Arabia is doing just that. And so when you realize that India, China, Saudi Arabia appear to be publicly accumulating silver under the guise of industrial uses, it's a lot more than industrial. Silver is really more strategic than it is industrial. Just a 10% shift from gold to silver, where all the people investing in gold, if 10% moved it to silver, it would consume all newly mined silver globally. This is, implying a potential massive squeeze. He said, 1 billionaire won't do it, but 10 would, or a 10% shift out of gold into silver. When you see governments like Saudi Arabia come into the fray, you know that it's coming. I found it very interesting. One of the things that I talk about a lot when we talk about the public not holding any gold, very little. My standard phrase I copy from Rick Rule. He says, from Joe and Jane six-pack to the Harvard Endowment Fund, the average of gold owned by the public and gold-related equities is 0.5%. Well, lo and behold, the Harvard Endowment Fund just bought $101.5 million in GLD recently. And so now you have all of these institutions jumping into accumulating precious metals. Now, these institutions, I don't know how much they understand the difference between GLD and the real thing, but you look at Bass, his last name is Bass, I forgot Kyle Bass, I think is his name, when he the Texas Teachers Union, or it was a big fund for that. I believe that's what it was. It was a long time ago, maybe a decade ago, but he put all that money, like $1 billion into GLD, and they took possession of it as well. So I don't know if he intends to do this, or they intend to do this time, the Harvard Endowment Fund. But the very fact that they're buying $101.5 million in GLD tells you that gold and silver are becoming more mainstream, certainly more mainstream. And I think you'll see at this upper level on COMEX, sovereign wealth funds, endowments, that's one step away from the public, who is still kind of blissfully, whistling Dixie, not really understanding the significance of this. But the people who are very, very tied in to what's happening globally are making moves and standing for delivery.
Andy points out that insiders are leading the charge into commodities while dumping stocks. Hedge funds and big investors have been selling billions in equities weekly, with major figures like Buffett holding record cash, NVIDIA executives unloading shares. Insiders selling far outweighs buying, while the public is heavily leveraged in stocks, options, and margin at record levels. At the same time, insiders are accumulating gold and silver, with record COMEX deliveries and the U.S. turning into a net importer. This contrast shows the public is all in on risky equities while insiders quietly shift into hard assets. Historically, insiders win because they have both money and information, positioning early before the masses catch on. We're nowhere near the top because the public hasn't really entered the gold and silver markets yet. Andy highlights that over $100 billion has been delivered on COMEX this year, much of it leaving the exchange, which signals insiders know something big is coming. With interest rates likely to fall, asset prices will rise, but average people without assets will be left behind. Hard assets like gold, silver, and even crypto look set to surge as the dollar weakens and commodities remain undervalued compared to financial assets. Insiders are positioning early because they see the stress building in the system.
Because the insiders, this is how markets work. The insiders always lead the charge. The insiders don't just have the most money. It's not luck. The insiders are also connected to the information. And that's the most important thing. And if you understood the information and you see the people who understand the information moving in a certain direction, well, you should be doing that. I've talked at length over the last few weeks about the contrarian indicator. And let's just go over it once again for the chance that the few people watching this haven't heard me say this ad nauseum. And I apologize for those who have. But on one hand, you have the insiders dumping stocks, the hedge funds, the managed money has been selling between $2 and $4 billion a week since June. Buffett is sitting on between 400 and 500 billion in cash. You have a 7-to-1 selling to insider buying since the beginning of the year. You have the 3 or 4 largest board members of NVIDIA, huge stockholders selling cumulatively over $1 billion in NVIDIA shares. You have Bezos has sold over $6 billion in Amazon since June 1st. You get all of these insiders who have the information selling, right? At the same time, you have the public, which is all in the highest allocation to precious or to equities ever. More so than the great financial crisis and the dot-com bubble, about 54%. But if that wasn't bad enough, they have the largest allocation to margin play, the highest ever, over $1 trillion, and the largest allocation to options. So options and margin signal speculation and leverage. So you have the public all in on leverage and margin. At the same time, the insiders are leaving. But flip it over to the other side. You have the public, as you mentioned, very tepid in terms of their understanding or allocation to the commodities. But what do you have going on the other side? You have the largest deliveries on COMEX that we've ever seen, ever. And the U.S. has become net importers. Who's bringing all of that gold in? And much of it leaving the exchanges. Well, those are the insiders who are closest to the information. So the insiders are buying commodities and selling equities, and the mom-pop public is nowhere near commodities and all in on equities. What could possibly go wrong? And this is what I think people should take away, is that, this is why the big money always wins. They're positioned when no one else has any inclination. And by the time the people figure it out, the insiders have been comfortably positioned for a long time, and they're probably at that point start looking for their next great value that no one else is noticing. And this is why the rich get richer and the poor get poorer, because the rich not only have the most money, they're closest to the information. They know the playbook. Do what they're doing, not what conventional wisdom is saying. We're nowhere near the top because the public has no understanding of exactly what is happening. This has been driven by central banks primarily, and big money, and whoever is taking possession here in the United States. But the public is nowhere near even entered into this at all. So no, I think that, to see a market move the way that it has without the public involved is rather telling. To see, what amounts to north of $100 billion delivered into the COMEX that we know of since the beginning of the year. What does that tell you? I mean, this has never happened before. And to see a lot of it leave the exchange, this has never happened before. And people at that level don't make moves like that unless they know something is coming. And I do believe that. I really do believe that. And so I guess I would say we're nowhere near the top. When you see, like, to your point, everybody talking about it, and everyone having allocation to it, well, it may be time to start thinking about this. But not only that, we're looking at lower interest rates coming, which of course benefit asset prices. And so this locks out average people as far as I'm concerned, because the average people, they don't own assets, and assets are what make the wealthy. Because, as they're going to choose a path of inflation, you're going to see everything pop up. You see stocks, real estate, bonds, gold, silver. All of these things are going to surge, in my opinion, at least at first. Now, what happens with the stock market ultimately is anyone's guess. To see all the people, all the big money moving out, to me, is very dangerous. But I think you will see cryptos, precious metals, those things are going to do very, very, very well. Hard assets in particular will do very well, because these are things that will protect you as your dollar is losing purchasing power. And, commodities right now are historically undervalued related to financial assets. So I would argue they're really the ones that are poised to break out. The system is under stress, Elijah, and it seems that to a degree reality is catching up. That's why the insiders are doing what they're doing. They do it long before the rest of us figure it out.
While the public remains largely unaware, central banks, sovereign wealth funds, and major institutions are quietly accumulating gold and silver, signaling a strategic shift away from risky equities and into hard assets. With record COMEX deliveries, growing BRICS alignment, and insiders positioning early, the stage may be set for a powerful move in precious metals. Those who wait until the mainstream catches on could find themselves locked out or paying much higher prices. Do you think the public will only recognize the shift into gold and silver after prices surge dramatically? Could silver face a historic supply squeeze if institutional demand continues accelerating? Please feel free to express your opinions in the comments section below. If you found this content useful, please remember to subscribe to remain updated and to give it a thumbs up.
I think now that it's a critical mineral from the USGS, that gives impetus to the validity of silver. And then, of course, who's ahead of the pack? Well, Russia bought silver, whether it was for strategic reserves or for monetary purposes, really is immaterial. It was a purchase of silver for whatever purpose. And so they've kind of spearheaded it along with the Saudis, as you said. So, yeah, we're starting to see it trickle in. What'll be interesting is it's such a small market, you don't need much more buying power to see it really move. It's been behind gold, as we all know. Now seeing 40, people are getting excited. They have a right to get excited. But I'm really looking forward to that 50 mark and see what happens. And we really only been over 50 for very, very short amounts of time.
Silver's proposed addition to the 2025 USGS critical minerals list underscores its growing role in national security and clean energy, with potential policy support, funding, and stockpiling ahead. The U.S. remains heavily import-reliant amid persistent supply deficits, while industrial demand from solar, electronics, and AI surges. With Russia, Saudi Arabia, and others already buying, even modest institutional demand could drive big moves in this thin market. Technicals confirm a breakout. Forecasts point to $40 to $52.50 by 2026, and a push past $50 would mark a historic milestone as silver catches up to gold's rally. David Morgan, often called the Silver Guru, a respected author and analyst, highlights that we're dealing with a massive global issue, rising debt that simply can't be repaid. That's a long-term tailwind for precious metals. Technically, silver has just crossed into rare territory, trading above $40 for the first time in years. But it didn't do so in a parabolic spike. Instead, it stair-stepped higher, forming a solid base along the way. We now have an 80% probability that this is a genuine breakout, not a false move. Complementing that, the gold-to-silver ratio is still elevated, meaning silver could outperform over time. David Morgan points out that gold still needs one more day above its recent all-time high to hit the 3-day confirmation threshold that would trigger another 80% breakout probability. Meanwhile, silver has already led the charge, and mining stocks are confirming the trend with fresh highs. Central banks, hedge funds, and family offices are increasingly shifting away from paper assets into hard assets like metal. Plus, silver was just designated a critical mineral by the U.S. government, and countries like Saudi Arabia and Russia have been scooping it up. Given how thin the silver market is, even modest buying can move the needle, and many see this breakout as only beginning. Please subscribe and like the material if you enjoy it, to receive the latest updates.
You know, we have a very big problem on a global basis, and that's based on this exceedingly growing debt worldwide, and it can't be paid off. So that fundamental just continues. But on a technical side, I mean, silver has not seen a 40 handle for quite some time. And this is new territory, more or less, for silver. And there's a nice base below it. In other words, it didn't just get there in a parabolic move where it just kept going up and up and up and up. And all of a sudden we hit past 40. It's stair-stepped up. So we've seen it, you know, get through that 35, 35.50. I mean, people have different ideas of where the exact resistance line is, but it broke through that. And instead of going right to 40, it built a base at a higher level, and now it's moved up. So we're sitting in a position now where silver, from what I call the Morgan rule, is confirmed. We have an 80%, not 100%, an 80% probability this is a breakout, not a fake out. Gold actually needs to go one more day above its all-time high, its recent all-time high, which I think is like 3507. Don't quote me, but somewhere in that range. It's above that yesterday and today, and then it should, if it does tomorrow, get those 3 days in a row, which would again give us about an 80% probability that too is a breakout. So it's, I think, a little interesting that silver actually led the breakout the way I measure them. Doesn't mean I don't agree with David. Don't agree with me. I'm just telling you how I do it. But the breakout here in silver is prior to breakout in gold, again, the way I analyze it. And that kind of reconfirms to me that silver is going to start catching up to gold. We do see the gold silver ratio getting to be a lower and lower number, meaning that silver is outperforming gold, but it's still very high relative to historical standards. So I'm still quite bullish on both the metals, but I do expect silver to continue to have a narrowing gold silver ratio over time. And we may get to what we've already seen in this bull market, which is 32-1. Right now we're above 80. So that implies that from here on out, and I say implies, no guarantees, that silver should do at least twice as well as gold on a percentage basis. Time will tell, but it's hard not to be excited, but I want to stay grounded and not get too overly excited. And the last thing you didn't ask, but pertains, and that's the mining shares. And we've seen, new all-time highs at some of our majors, and we've seen some of the juniors really start to perform. At a month close over 50, we are into a new ball game, a new paradigm. And people that own it, that are long-term strong hands, probably aren't going to sell it at 50. Now they might lighten up some. I don't know. I don't know people's thinking, but what I do know is that once that occurs, and I believe it will, then what happens? Well, the holders, the strong hands, will hold because they think, wow, how high is it going to go? It's going to get 100. That's what they believe, or 75, or whatever they believe. And that means there's not a lot in the float. Strong hands are holding hard, holding strong. So new buyers, like the industrial side, that has to have it to maintain production of whatever they're making, solar panels, or silver shot, or silver liquids, or silver mesh, or whatever it is. They've got to buy it or they're out of business. So, and then I think the algorithms will kick in because they'll see there's very little upside resistance and very strong hands holding it. So any buying will move it higher. So they'll want to get in early and sell to their compadres that get in later for maybe a short-term trade, but nonetheless going from 50 to 55 when you're leveraged to the max. That $5 move when you're highly leveraged can be lots of fiat. I don't want to see a parabolic move where silver goes up $1 a day for 12 days in a row and we're at 55.22 and then it collapses back down to 40. I don't want that. I want it to build a base of solidity that continues this market to its ultimate destination, which, believe me, not me or anyone else out there knows what that number is.
The real signal of a market peak comes when mainstream outlets, like a big magazine cover asking, "Do you own gold?" start hyping metals. Until then, most talk is just noise. Morgan predicts that we may still see short parabolic bursts followed by pullbacks, but the long-term trend is intact. For investors, even a small hedge, 5 to 10% in gold or silver, makes sense alongside traditional assets. And while unlikely, unexpected shocks, like a supply failure in silver for solar panels, could suddenly thrust metals into the spotlight. That's why it's important to stay prepared for both steady growth and surprise events. Now, let's review the interview.
The signal is when the mainstream, like, a Time magazine, or I wouldn't use the Wall Street Journal, or maybe even Investors Business Daily, which I like much more than a journal. But I would think when you start to see the mainstream talk about, do you own gold on the cover with a question mark, that's usually the sign of a top. But until we see that, you're still in the noise where Oh, gold. Yeah, we heard that. Yeah, okay, it's making a new high, but it took all summer to get this far. Come on. Oh, banks buy it because banks have to buy it. Why would you buy it? Yeah, it's a pet rock. It's done well. You'll keep hearing that kind of noise, and so I'm not too worried about it going to that last phase yet. I think it's a couple years away. Could be wrong. I think you have moments where it becomes parabolic and then backs off. So you get this kind of candles where you get a green one with the line and then it comes back down and settles in. Maybe you'll get a consolidation in a small red candle and then another. But I think we're, again, as I've said 3 times already, in a position where if you don't own metals now, I would buy now. I wouldn't buy everything. If you're really conservative and you got a pretty good portfolio and you're still a big believer in the stock market and the US is going to get stronger and better, I still recommend, maybe 5-10% and buy it now and forget about it. Because if you're only, 95% of your portfolio is real estate, bonds, and stocks, and you're happy with that, you should hedge yourself. Put it in 5% in the gold only. I mean, gold's still overvalued relative to platinum and silver. But is gold overvalued relative to the paper dollar? Don't make me laugh. Not even close. So that is a case to build. And the other one is what else could happen? And I would just venture into this, Danny. We could see where we get something out of left field, like a failure to deliver to a solar panel manufacturer in silver. And all of a sudden that does make it into the news, or maybe it makes it to social media and it's proven by a reliable source or two. I like to source things at least 3 times, and all of a sudden, my goodness. So there could be an offset. I don't expect that, but I don't rule it out. I try to keep my thinking as objective and as broad as possible. I try to keep it open to all possibilities, even the, let's say, tail end of the curve, where you have to put your hat on, but they still exist. I mean, the tail end of the curve is there and it does happen. I mean, the Black Swan book. I mean, these things do occur. So something like that could all of a sudden shift us from the, noise into that wake up call very quickly. Again, I don't anticipate it, but I don't rule it out. I don't know. I try to stay aware of it. That's why I don't sleep anymore, because the news feed is so quick these days that if you go to sleep, you're going to miss something. I'm joking, of course, but it's a tough market to keep ahead of.
In short, silver's recognition as a critical mineral, its steady breakout, and growing global demand signal the early stages of a powerful long-term move. With debt concerns mounting and institutions quietly reallocating into hard assets, silver may be poised for outsized gains compared to gold. The key is not chasing hype but positioning wisely before mainstream attention arrives. If silver does push past $50, will that trigger a true revaluation of its role as both a monetary and industrial asset? How much longer will central banks and institutions quietly accumulate before the broader public catches on? Please subscribe and like the material if you enjoy it, to receive the latest updates.
Obviously, I could adjust my silver up, a bit. I mean, it wouldn't surprise me to see 40, 42, who knows, maybe 50, right? I mean, and I didn't say silver wouldn't, I said just basically don't bet on it. I think silver is bullish at the moment. Gold at the moment, I mean, today, price of gold's down 2%. Will it be up 2% tomorrow? I don't know, maybe. But, we're in a bull market, a long-term bull market for all these reasons, and probably both metals. I'm just less excited about silver, for these reasons. But yeah, I think in both metals. And, for the rest of the year, would it surprise me if we fell short of 3,600 in gold? No, it wouldn't. Would it surprise me if we surpass 3,600 and we resume the march up and we see 3,800, 3,900? No, it wouldn't surprise me either.
Silver might fall behind gold's momentous rise, but that may leave more room to run when the gray metals rally takes off. With renewed retail interest, sustained industrial demand, and another supply deficit, silver enthusiasts expect prices to reach $40, which aligns with the average expert price forecast for 2025. His benchmark rises to $50 when looking to 2026. Gold regained momentum after losing ground in the days following the announcement of tariffs on April 2, as investors sought safe haven assets. According to the bank's economists, there's a 45% chance of a U.S. recession within the next 12 months. If that happens, the analysts said gold could hit $3,880, $3,800 to $3,900, by the end of the year. Keith Weiner, a U.S. economist and founder-CEO of Monetary Metals, points out that a recent U.S. Customs ruling, suggesting tariffs on 1 kilogram and 100-ounce gold bars, briefly sent gold futures to record highs, disrupting global bullion flows and threatening New York's role as a key price hub. Markets yanked back once the administration clarified that gold would remain tariff-exempt. Weakening global currencies, excessive government debt, and its status as a non-sovereign financial asset continue fueling its safe haven appeal. Analysts expect continued strength, despite temporary pullbacks. Volatility amid tariff uncertainty would be beneficial for gold. Central bank purchases of gold also continue to rise amid a de-dollarization push driven by the administration's tariff policy. Investors have been riding the gold gravy train all year, according to the latest gold demand trends report from the World Gold Council. Gold ETF inflows reached 170 metric tons in the second quarter of 2025, valued at nearly $400 billion, marking the strongest first-half finish since 2020. Silver prices have dropped to their lowest in over 8 weeks. Unlike gold, which thrives as a haven, silver has yet to follow suit with similar gains. Markets increasingly view silver through the lens of industrial performance, especially vulnerable given sluggish factory data and new tariffs, casting a shadow over its near-term outlook. Before we begin, please click the bell icon and subscribe to stay up to date on our latest uploads. We always value your thoughts and feedback.
Yeah, so this is one of those things where, unfortunately, there's a lot of bad takes out there in the gold community. And these bad takes all have the same recipe, which is something happened, and therefore, because something, that's going to cause the price to go up. It always leads to the price to go up. Good news, the price is going to go up. Bad news, the price is going to go up. No news, the price is going to go up. And so we thought that, when Trump took office, there was going to be tariffs on a lot of things, and there was a fear that that was going to include, gold and silver, which would have been really bad. I mean, it would destroy the futures market in the U.S. and force it to go somewhere else. And then we got clarity. No, it doesn't apply to the precious metals. Okay. And it doesn't apply to copper and some other things. Okay, great. Then, I don't remember when that was. Seems like it was a couple of months ago. It does apply to copper after all. So that's really going to kill everybody who manufactures with copper in the U.S. And create some perverse incentives. So, cars don't use that. I'm trying to think of what really uses a lot of copper. But it'll make sense to manufacture that in a low tariff country and import it as a finished good rather than importing the copper and manufacturing in the U.S. So some very perverse incentives there. But we got, on Thursday, it came out that some big trader or refiner had asked, I think it was the U.S. Customs Agency, for a ruling letter to clarify the status of gold. They wanted legal clarity so that they're not risking not paying something they're supposed to pay. And, obviously they want to make their plans and their investments. Nobody wants to invest money only to be told by the government later, actually, your investment is rendered useless because of this tariff. And the letter came back and said that kilo bars and 100-ounce bars are tariffable. They're in the category that's subject to tariffs. Well, that sent the gold market into a tizzy, because apparently that takes effect immediately. Let me talk about kind of the difference of silver versus gold. Silver is much more the working person's precious metal. And when you start to see the jobs market, which wasn't really all that strong for, blue collar, trades. Yes, certain trades at certain times, if you're in the building trades in certain booming cities, I'm sure there was unlimited work. There was a period I'll call it the unlock whiplash after COVID lockdown was over, where, truckers, had all the work they could handle and more. But overall, the market for, people that are working with their hands or doing a skilled trade, just not been that strong a market. Now, certain niches within white collar knowledge workers like AI, scientists right now are getting these like $100 million packages. It's almost like reading about sports stars. And you read about Michael Jordan getting a package like that, and now it's like these AI guys are getting it. But silver is the savings of tradespeople and blue collar workers. And now we're seeing the job market roll over, and that's going to hit, that segment, hard. And in addition, silver has this industrial component. And if manufacturing and all those other things are rolling over because of tariffs, for example, and also because this boom is just really long in the tooth. We're basically in one long boom that was juiced up when in spring, or was it March, April of 2009, the Financial Accounting Standards Board said, you don't have to market the losses. And so the banks were able to restate their financial statements, and suddenly they looked a lot better. And that was pretty much the day that the market turned around and began to boom again. So we're in this hell of a long time, 16 years and counting of boom, which is very long by any historical standards. I think we're well into record territory. So that we could be rolling over just because of that. Tariffs aren't going to help, all kinds of other things. And so silver, because of manufacturing demand falling off a bit, and because of working people savers just having less to save, I would generally expect silver to underperform. Now, could silver outperform in the short term? I think there's a lot of forces building up to suggest it could, because the asset speculative class is seeing silver now. So if they jump into it, almost anything's possible in the short term. But gold, yes, because all the currencies, remain in this horrible bear market, and every government around the world has gone all in on madness, and it's getting madder, right? So we elected Trump as a protest against the profligate, stupid spending of the Democrats. And what do we get? A big, beautiful spending bill that accelerates spending even more. And of course, gold responds to that, because it's just, it's just a hedge against being a creditor to the government, which is what, if you hold the dollar, you're effectively a creditor to the government. And when the government's becoming something that embarrasses even drunken sailors, you don't want to be a creditor. Well, look around. What asset can you buy that's a financial asset that isn't being a creditor to the government? It's gold. So yeah, we're in this gold bull market. Silver, I think, medium to long term, not really. Maybe it'll keep up with gold to this point. It's not going to outperform. Short term, yes, there could be a big pop in it. That wouldn't surprise me, given everyone can see the chart patterns and say, wow, silver's going to pop. And then they'll make it pop, right? But, is the real long-term demand there for it?
Silver's resilience is evident compared to previous years. Since the start of 2024, silver has gained over 50%, demonstrating increasing appeal for investors seeking diversification and growth potential in precious metals. Renewable energy, particularly solar power, continues to fuel demand. Despite some uncertainties for U.S. renewable projects under the current administration, global solar installations are expected to hit new records in 2025, all good news for silver. The solar sector's appetite is so large that by 2050, it could consume nearly all of today's known silver reserves. Geopolitical tensions add complexity. Russia and Mexico, two of the top silver producers, face ongoing political and regulatory challenges that could further restrict supply. Silver's reputation as a safe haven is growing amid economic uncertainty. Volatility stemming from tariff threats and policy shifts since early 2025 has prompted investors to seek tangible assets, such as silver. Interest rate expectations also matter. Even if rate cuts slow, sticky inflation suggests real rates could fall, Silver is set to hit $40 this year and $50 by 2026, according to Peter Croft. The silver stock investor author credits the simultaneous rise in industrial and investment demand, ongoing supply deficits, and positive market metrics for this bold price forecast. Under the right conditions, Croft even thinks silver could explode to $300. Even famed silver investor Eric Sprott shares a similarly ambitious expectation of $250 to $500 silver. Let's redirect our attention towards the interview.
There's a point at which there isn't even necessarily an explanation. Now, the silver people will talk about structural deficits. Now, they've been talking about structural deficits since before I got into this. I sold my company in August of 2008. So we're exactly 1 week away, a week and a day away from the 17th anniversary of that sale, right? That was August 19, 2008. And when I started reading about this stuff in fall of 2008, they were talking about structural deficits for silver. Now, if the price moves, especially sharply in a short period of time, you can't look to a 20-year-old story as the explanation. It's like the left says, oh, consumer prices went up this month because of greed. Wait, are you saying there wasn't any greed last month, and this month greed came into the market and that's why prices went up? Like, if there's something that's basically a constant, greed is a constant. And the alleged structural deficit in silver is a constant as well. It doesn't explain change to the margin. So a lot of people may cite that, but at some point sentiment, takes over and then everybody, wants to buy. Yes, it's true in places like India, if gold is perceived to be too expensive, and it's also out of reach for, very large numbers of Indians just don't have. Minimum wage in India is between $2 and $5 a day. So it doesn't afford them, much if any gold. Silver is much more affordable. So, if gold becomes less affordable, there'll be some switch to silver at the margin there. That's true. And that can drive it a little bit. Silver is a smaller market. But at the end of the day, I think it's sentiment. The sentiment can be self-fulfilling for some period of time. As it was, I think there was non-sentiment factors as well in 2011, but look at what happened to silver in the first part of 2011, right? We shot up in late 2010, silver was under $20. And by, was it March? It hit peak or April in 2011, it was $50. So boom, 2.5 times. And then we spent how many years in a bear market in a silver wilderness? So the sentiment, when it turned. It was done. And that first day that silver dropped from $49 to 30, was it 35 or 34? It was like within a day. And all the smart people were like, silver's done, stick a fork in it. It's not going to recover the $50. This is not a market correction. This is wicked volatility. This is a bear market. If you have a loss, take your loss and move on. If you still have a gain, lock it in and move on. This thing is done. And it was for a long, long time. We still haven't recovered. 17 years later, we're getting closer to recovering. Could it go to 50 and beyond? It could. Will we see 30 on the gold-silver ratio again? No way. To see 30 on the gold-silver ratio, we'd have to see over $100 in silver. Keith Weiner, August 11, 2025. You're not seeing $100 on silver anytime soon. Not going to happen. It is what it is.
Although industrial headwinds and uncertainty surrounding tariffs may cause silver to lag behind gold in the near term, its long-term fundamentals remain solid. With projections of $40 in 2025 and $50 in 2026, silver is poised for substantial gains due to its continued industrial application, particularly in solar energy, as well as rising demand and supply constraints for safe havens. In the meantime, gold is still growing thanks to central bank purchases, safe haven flows, and a deteriorating macroeconomic environment. If recession worries materialize, it might reach $3,900. In an unpredictable global economy, both metals remain essential for investors seeking growth and safety. What possible effects might current tariff measures have on the equilibrium between the industrial demand for silver and its attractiveness to investors? If the need for manufacturing and renewable energy around the world recovers more quickly than anticipated, may silver's anticipated surge surpass gold's gains? Leave a comment below with your opinions. Please like this video and subscribe for future updates if you liked it. We appreciate you coming along on this adventure.